Good evening, everybody. Welcome to the Sunday Night Market Strategy session for April 12th, 2015. No, that's not why, Scott. Welcome, everybody. Hope you had a great holiday last week. If you celebrated Easter, Passover, or just took the Sunday off. We're going to get started right now by looking at the economic reports and the earnings reports. Earnings season goes into full swing this week. So gone are the weeks of saying, hey, nothing going on. So we'll skip the earnings. This week we're actually going to start going through the earnings. So Monday, nothing big at all, actually, on the economic front. Tuesday's pretty busy. Core retail, PPI, and retail, those are red, and then core PPI. All pre-market, though. You got business inventories at 10, no big deal. Wednesday, April 15th, which is my wife's birthday. It is very fitting, by the way, that she was born on the IRS tax deadline day, by the way. It's extremely fitting. 7:45. Minimum bid rate, 8:30 ECB press conference, so the rate change or the rate announcement may not be a change for the Euro session, for the Euro group, sorry. Then we got capacity utilization, industrial production, NAHB housing market, crude oil inventories, and then Lacquer speaks. Thursday, building permits, unemployment claims, Philly Fed, so a couple of reds on Thursday as well. Then Friday, CPI, core CPI, preliminary University of Michigan consumer sentiment. So it's pretty busy this week. A lot of reds. Monday is day off, and then we got 3 reds, 2 reds, 3 reds, and 3 reds. So, yeah, it looks like it's a pretty busy economic report week. In the end, how much influence will it have? I don't know. We'll let Paul talk about that, I guess, a little bit, but I don't think there's going to be much going on that's going to move us too much unless maybe they shake it up in Europe. I don't know. Let's look at earnings. Nothing really. I mean, there's stuff, but when I say nothing, I mean nothing important. You got Monday, here's Tuesday, you got Intel. So this is it, the official kickoff of earnings season. I know they're saying it already kicked up with Alcoa, but last week wasn't really that busy. But now it's going to start to kick in. You got Intel, you got, I mean, I guess you could say JP Morgan kicks it off because that's in the morning of Tuesday, but you got Intel, Johnson & Johnson, JP Morgan, Wells Fargo also in the morning. Okay, now we go Wednesday, the dreaded tax day. Got, what's this? You got ATHN and BAC, and I mean, these are, you know, we're starting to get thick a little bit around here. Netflix, everybody's going to be watching that. USB reporting. Then Thursday, American Express, BlackRock, Citigroup, Goldman, of course. That's going to be well watched. So here we go. I mean, we're ready to go here. United Health. I'm sure there's some I'm missing, but you know, every day you got to look now. You got to look every day because there could be something that could potentially move us. General Electric is not going to move us anymore. It used to move us. All right. So that's, you know, we're into earnings season here now. That's it. We're ready to go. If we look at the market overall, we broke a short-term consolidation on Thursday, and it appears to me at least, I'm sure Paul will have his say, I'm sure Paul will give his 2 cents, that it looks like we are back in business and are at least going to try to get back to the top of this range where this blue line is up here. Okay, let me, you know, whenever I look at my charts, I always want to take that blue line off, and then I remember why I have it on in the first place is to do this. So far, you know, this is a range, and it's been for now, you could say it could qualify as a couple of months. And I talked about this a few weeks ago that, I know a lot of people, of course, are putting a spike in the market because that's what people do, right? They can't wait to try to, they try to put the, you know, the axe in the head of the market. And I know the uber bulls. They're still looking for us to just keep ripping higher, but there's a third option, which is that we go sideways for a little bit, and we did it back here, and this could be another time that happens. So obviously, we have to watch if we do get up to these highs. If we break through, I still think this is an open target up here at 212.97, but nothing's saying that we can't go to the highs here and come back down. All right. One stock before I hand it over to Paul that I want to show you is Aetna. Aetna is in a gorgeous, gorgeous power coil up here at the highs. I mean, they don't get any better, any nicer looking than this. Does that mean it has to go higher? Of course not. But it's a very, very nice tight pattern. As always, wait for confirmation, but this is really, I mean, they don't get any prettier than this. Of course, doesn't necessarily translate into you able to snap your fingers and make money. Amazing since it's up 50% in a few months, but it still could go perhaps a bit higher if it does break out. Rick asks, do you ever exit stocks before earnings? Well, that's kind of a strange question. The question really should be, do you ever not exit stocks?
You're a strange guy, so
I am a strange guy. But yeah, I think that getting out of stocks before earnings is the more prudent way to trade earnings. If you're going to trade them at all, you can get a little bit of a lift into the earnings announcement. Let's see if Intel is Intel. What's Intel's doing? Yeah, Intel's on a little bit of a move here, but I mean the market's kind of lifting too. But so there used to be a very dependable trend where you used to be able to get in a few weeks ahead of earnings and then ride them up into earnings reports. But as soon as the super guru got wind of it, that guy could ruin anything. So he ruined it, and now I blame him completely. And now it doesn't work anymore. But yeah, there is like a tendency to rise into earnings, but you hold it overnight over the earnings report, and you're just gambling. I mean, maybe it'll go higher, maybe it won't go higher. And that's literally, I mean, those are your odds, right? Like I love people that go, well, that's not being very direct. Well, no, this is the firmest opinion I can ever give. It might go higher, it might go lower after earnings. Literally, that is the firmest I could be. It is a pure gamble. Personally, I like shooting craps. I like being on the don't side, as Paul knows. So I would rather do that if I'm gambling than try to hold something over earnings and then think you're a hero if you make money and be dead miserable if you lose money and say, I knew I shouldn't have held. Okay? Yeah, I mean, so Scott says if one owns stocks before earnings, it's a great time to sell calls. Right. So what Scott's saying is if let's say you're in a long-term portfolio and you have to own stocks, yeah, you could sell options against it. And of course, you do have the chance of getting called, but you're going to have a good implied volatility, and that implied volatility is going to get sucked dry after earnings due to the IV crush, what's called the IV crush. So, my personal story is when I went on my honeymoon, and it was a delayed honeymoon, so it was a couple years after we got married. I had a stock, I had an option play, and I had somebody managing the trade for me, and they went up after earnings, and my calls just got, smashed. And I was like, this is unbelievable. We're up 3 points, which it wasn't a big moving stock, so 3 points was good, and I'm down on the call. And I could never get out because the IV gets sucked right out of it. So, yeah, if you're in stocks, yeah, you could sell calls into earnings, but then you have a chance of getting called out. And just remember, while selling premium does give you a little protection on the downside, if the stock draws down, it doesn't protect you all the way. So, in other words, if all you're doing is I'm going to hold stocks just for holding them over earnings, I don't think that's a good idea, but I'm not your accountant. I don't care what you do with your money. But if you have to hold the stocks, or there's a reason you're holding the stocks, like they were bequested to you, or you got company stock, or you believe in the longer term, and you want to do something, then yeah, selling earnings is a good option. Okay? Selling options in front of earnings is a good option. Okay? So, I hope I wasn't too obtuse with that description. So Paul's going to take over, and then I am going to come back, and I will answer all your individual stock and Forex and everything else questions. But I will be here, so if you have any questions for me, you got to give me 30 seconds to unmute the mic. But I'm not going anywhere, so I'm going to be here.
I'm so comforted to know that. Okay. Good Sunday evening, everybody. Big, busy week. We had the Masters today, which was, I wait all year for them. I love the Masters. I wait all year for the Masters. And as nice as it was, if you're a Jordan Spieth fan, to watch him run away with it, I mean, it was the most, to me, kind of boring tournament. There was never a charge, no excitement, nothing ever happened. I can't imagine viewership was anything but pretty awful. So look forward to that. That didn't happen. Although my best friend's kid got bar mitzvahed last night, so we spent the whole weekend down in Westchester, and that was fun. And we had our first softball practice for coaching my daughter's team today, and baseball practice coaching my son's team yesterday morning. And, of course, since we last chatted last Sunday, was it last Sunday? Can't remember. No, last Saturday, right, because of the Easter. My daughter and I went to Florida for the women's Final Four, which was the best trip I ever went on with my daughter, just the two of us. So we tore up Tampa, had a great time, stayed in the hotel with the team. She spent literally 3 days, morning, afternoon, night, hanging out with the team, the former players, and the players' families. So lots of fun, lots of good pictures that I'll post on my blog whenever I get off my rear end to do it. And I am just very, very glad that Passover is over. It was not fun. For me, it's never fun. It's 8 days of torture. Not only, obviously, you don't eat bread and pasta, but all the good alcohol, all my bourbon goes away. So it was I really enjoyed having about 6 bourbons last night at the bar mitzvah. So in any case, I am just finished setting up. And, yep, thanks, Scott. Yeah, it was last Saturday. I'm trying to think, Scott, because I'm like, last Sunday we were in Tampa. How did we, and there was a game, so how did I do the review? But we didn't, because we did it Saturday night. We left Sunday morning. So that's that. Let's see. I am set to go. Give me 1 second. Yeah, I was at Seder Saturday night too. It was a great excuse to leave early to come do the review. Everybody else is droning on and on and on and on. All right, let's rock. So let me preface the review by saying this. Nothing has changed for the long-term and intermediate term. So my forecast remains the same pretty much as long as you guys have been with me, and certainly since early 2012. I've been generally bullish on the market over the intermediate and long term. That remains the same. My short-term views obviously ebb and flow. I do agree with Tiny, or Tiny agrees with me, however you want to put it. We should be going back to all-time highs shortly. That was my premise coming into the quarter. It hasn't changed. The only murkiness in the short term is sentiment is certainly overdone on the upside. We're back to that kind of alarming level of bullish sentiment. If you look at the sentiment surveys, if you look at put-call ratios, asset flows, you've really got kind of an overcooked market sentiment-wise. But nothing else is really lining up for a decline. And I know a lot of you guys have emailed me arguing the bearish case, and I've politely disagreed, and I still disagree. We could go down 10%. No, we could go down 8 or 9%. So rounding, we could go down 1,700 Dow points. And that's not going to alter my opinion at all. I don't think we're going to go down 1,700, but we probably could. The market's just not set up for a big smash. And I know a lot of short-termers love to be long-term bearish. Doesn't jibe with my take right now. But I think the proper spot to be is intermediate-term bullish short-term, neutral, and lean one side or the other. But I do think we're going back to new highs. And there's nothing that I'd really changed lately. Let's dive in. I briefly listened to Tiny talk about what's coming up this week. I think most of the economic reports are nonsense. The ECB is, now that they're QEing, you got to pay attention. Nothing really should change for a while with the ECB. They're going to QE, and when this runs out, they'll QE some more, and they'll increase it, and blah, 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 blah. Earnings are starting. You know, the expectations have been ratcheted down so much that there's one article I read. We were talking about, you know, the first earnings fall year over year since '09. So expectations are really low on earnings. The bar is set low. Are we going to exceed them? If we were declining into earnings, I'd feel a lot more comfortable. But right now, here's the Dow, and let's just expand the chart a little bit. We're right in the middle of the range. I've spoken about this range for a while. We're digesting this really big run. We're still digesting this really big run. And now I think we're going to poke to the upside. Get our head a little above 18.2 on the Dow, 18.3. Do I think we're taking off to 20,000 right here? I don't, but that doesn't matter. We're still going to have a little bit more upside before we go back into the range or pull back or consolidate. So the Dow looks to me still looks constructive. I think we should poke above the new highs this week, possible, but I think you're looking over sometime this quarter. S&P 500 looks almost like the Dow. I mean, it looks constructive. We're still in this range. We've been in for 2 months. Stochastics are opening up. That's about all you can say, right in the middle, smack dab in the middle of the range. Now, the mid-caps, however, this, which you guys know, I like these flat top patterns. These are the breakouts I enjoy when they're flat tops. So this looks like you have an ascending triangle, and we're going to poke above this. You could get a run in the mid-caps, for sure. Smalls, guess what? Looks kind of sort of similar. Maybe a touch weaker, but the small caps are right back, you know, half a day away from new highs again. Nothing really to speak of here. Consolidation with an upward bias. They should poke above the all-time highs again. And the Qs, laggards, but they're getting a little bid. The last 3 days, the Qs got a little bid. I moved some money this week out of mid-caps into the Qs just as a laggard play. So this Qs, I also think they're going to poke back to new highs for the year, and eventually I think the Qs, hold on, my mouth's still stuck with sand. And eventually I think the Qs take out 120. So 120 is new all-time highs. So that's another 13 points or 11-ish percent, 12%. So the indices look constructive. Would I run out and put all my money in tomorrow? No, but I think they look constructive. Europe, as you know, I liked Europe coming into the year, my forecast, and Europe still looks good. Up here, I said we're going to take out these highs. I did not think the decline would be this deep. And then down here with the hammers, we said we're going back to the highs. We did. It was rejected by the bears. And now we're trying once again. So I do think Europe pokes above these highs, if not this week, then next week, and we get a little bit of a run in Europe. Emerging markets now have been really strong on the weaker U.S. economy because the dollar has been a little weaker, and we're not going to supposedly raise rates right now, which I don't think we were anyway. For a while I said we're taking out these peaks. Had some nice little arguments with you guys via email, but lo and behold, we are well above these peaks. I have not done a single thing. I still own the Philippines very happily. I think it's going higher, a little extended here, but it's still looking constructive, and you can certainly buy weakness. This one's been an absolute, as you guys know, I've owned this forever. China's been a dynamo. These kind of runs, for me, 40 to 50 in a month, don't happen that often. So I got to make a decision this week because it's still the #1 country on my hit parade. But this kind of move, 25% in a month, I got to figure out if I want to go against my system and put a stop in or just let it ride. So I'll have to make that decision shortly. If you follow me on Twitter, I commented on Mylan the other day, which is more up Tiny's alley, but I did because when I was on Fox Business last month, 3 weeks ago, I called Mylan right here as a constructive chart possible takeover play. And it ran nicely, and I thought I had something, and then rumors of it being taken over by Teva got quashed because Teva began to take over their own, and lo and behold, in here, Mylan took over, I can't remember what company. So now I feel like I'm not a total moron. We get a nice profit here from my comment on the Payne show, and if anybody followed it, you better put your stops in at least halfway in this bar to protect. So let me just stop and look at questions. Johanna asked if we go down Monday or Tuesday for a few days and put in a lower high on the S&P, will that change my opinion of the market direction? So let's look at that, Johanna, and everybody else. So let's say Johanna has a little bearish tilt to her. Let's say we start here and we go down and put in a lower high. I assume, Johanna, you mean below the March lows. Would that change my opinion? Is that what you're talking about? All right, so while Johanna's typing, if we go below the March lows, will it change my opinion? No, other than to say this. If we go below the March lows, it just means that we're kind of sort of still in the range. Nothing's really changed except the short term has been temporarily halted. I don't think a move below the March lows will mean anything other than pushing out my scenario to later this quarter. If we don't go below the March lows and we kind of pull back like this, then I think the next move could be a biggie. So if we just stay in the range and move sideways for a while, then I think we could really move out to the upside. But even if we come below these March lows here, I still think we're going to new highs. I think there are too many things in place that look good, and I'm not concerned yet. I will be. One day I'm going to get really bearish and change from being this bull from being a bear, and then you guys will stop calling me perma bull. Why did the China ETF move up so much? China's economy is slowing. Yes, Gavin, China's economy is slowing, but the Bank of China is, they're on the scene, they're on the case, they're going to rescue the Chinese market. That's the fundamental backdrop. The soft news is good news. Yes, Johanna, this is, so we talked about this in live. This, to me, was the perfect flat top. 1, 2, 3. I love flat tops. Why do I like flat tops? Because a lot of times you get breakouts like this. Boom. There's your flat top breakout. Hard to buy it up here until this happens. Oh, my word. This is a flat top. That's why I like playing the flat top breakouts. Somebody else had a question. Ricardo had a question. Let me just read it, Ricardo. Give me a second. Volume is very weak, like never before, unless stocks are participating in this up move. You think it's a problem? No. And if we go down, we'll be fast and furious. So, Ricardo, do I think the weak volume is a problem? No. Here's where Tiny and I differ. I don't view volume. Volume used to be the kind of the catalyst, the horsepower of the bull market. That's how the textbooks laid it out. Markets have evolved and changed a lot. So I'm not a big believer that you need this huge surge of volume on the upside. You do when you're up against big resistance. When you have to eat away resistance, you need some volume. But overall, we're going to see volume on the big down days. We're going to see volume more at bottoms than at tops. So while your point is a good one, I'm not worried. If we do go down, it'll be fast and furious. And guess what? I'm not sure what your definition is, but I don't think we're going to go down 2,000 or 3,000 points. Could we go down 1,500 in the Dow? Sure. Do I think we're going to? No, but we could. I don't think we're going to go down, 10, 20% right yet. I think the chance that's probably later this year. All right, let's go on to the key sectors. 3 key sectors. And tonight, let's cover the ETFs instead of the... So here's the trannies. I'd said all year long, they are percolating. And I think that ultimately this pattern resolves itself to the upside. Look what happened, folks. Please pay close attention. All right? Very close attention to what we discussed right now. So there's the line in the sand. A little rejection all the way to the right of the chart. And then, oh my gosh, uh-oh. We gap down. That means all these people who had stops in up this blue line got stopped out of the trannies right at the low of the day. Let's see what the volume was here. Oh my word, with a hint of sarcasm. Volume spikes. Everybody gets stopped out right at the open. And what happens? We close 2/3 of the high in the range for the day. Whoops. And then the trannies begin to rally a little bit. I do ultimately believe the transports are going to make new highs again. Okay? If they don't, and I am wrong, I wrote a blog about this the other day, so let me pull it up. Dow theory warnings continue. The trannies and the Dow made its last high here. The trannies made their last high here. We have a Dow theory warning, non-confirmation / divergence. The blog. Until we see the Dow take out these lows, I'm not going to be worried. That's the one. The stocks. We got Intel coming out this week. Stocks remain in the trading range. I do believe also the stocks is going to take over market leadership later this year and take off to the upside, well above 100. But right now, there's really nothing going on. They're in the middle of a range. It looks constructive. No real concerns yet. And the banks, they haven't even moved from last week. They are neutral. So of the 3 key sectors, none of them look awful. They all look neutral to slightly positive, slightly negative, nothing to worry about, nothing to have jubilation about. Okay. The rest of the sectors, IGV, software, looks good to me. And it looks like it wants to see new highs now. So this is a good one to play. IGV. Software looks fine. Stochastics opening up. And got some nice green bars. We're in a whisker of new highs. Telecom, one of my sector plays of the year, is consolidating nicely. I still like it. I think it's a good laggard play. It's got some good yield to it. So unless the economy really picks up steam, I think telecom is a quietly decent play for the year. Diversified financials, they're a little weaker than the banks, but really all you can say is they're neutral. There's no hint either way. They're neutral. Consumers, which have been our leaders, boom, they remain leaders. Here's your flat top, Joanna. Guess what I think's happening, folks? You could get another run coming to the upside in XLY. And XRT, which is in XLY, kind of sort of the same thing, a touch stronger. This group ain't done. Don't count the consumer out. My other sector play of the year, I loved home builders. They also still look pretty darn good. So the consumer, the retailers, and home builders are all in that one big group. Still look pretty good to me for leadership. XLI. Got a little bid from GE's divestiture announcement. I have no interest yet. They're not leading. They're kind of just coming along for the ride. No real opinion. XLB, I don't like them all year. They're fine, but I think they'll be dragged up or down with the market. I think there's better money to be made elsewhere. XLE, diversified energy. You know my feelings on energy. I've been bullish and owned them for a while. Same thing. I want to see what happens after we close the gap. That's been my target all year long, close this gap. OIH, I still own it. It was a really good week last week in OIH, and I was definitely early and wrong, as you know, having bought, I believe, first back here, and then I did a tax swap somewhere in here. But I'm looking for OIH to close the gap before I make a decision what I'm doing with it. But I think they still look pretty good. Beautiful, almost maybe a rounded bottom. I've said this all year long. Anytime oil has gone down at least 50%, the ensuing calendar year it rallies at least 50%. So it regains half of what it lost. Tiny and I differed here on oil as well. I'm still sticking on the long side of OIH. Maybe he's right and we see new lows. And hopefully I'll be out of it by then. Let's say that. Hopefully it closes the gap. I get a shot to get out with some profits and move on to something else. XLV, one of my largest holdings. I was a little concerned here. I told you I wasn't selling it, and it bounced back nicely. So what am I looking at? Stochastics really oversold. Price held support in this range here. And now we want to see, I'd like to see XLV see a new high again. That'd make me really, really happy to go along with IBB. Kind of sort of similar, same thing. Pull back to where it should. It held where it should. And now we want to see if stochastics oversold and opening up. Now we want to see, can we get back to all-time highs again? Or are we now in some kind of trading range? No opinion yet. I do not think XLV or biotech is going to go to new highs and then rocket higher. I do think if we get new highs, maybe it's an opportunity to sell a little bit. Defensive stocks. Oh, IYR, which I think when did I buy it? I think I bought it last week. I'm not looking so hot. I own it, but I ain't looking so hot. I don't like these 3 out of 4 red candle days. Stochastics looks crummy. So I am in this, but I'm not smiling. Utilities have done really nothing. They have been unable to bounce back from, this is a pretty significant decline, against a pretty good backdrop for a soft economy and rates not going up. And the utilities are kind of stuck in mud. So I'm not thrilled with their behavior. XLP, which is consumer staples, trade a little better. They haven't gone anywhere since essentially November. This is really just a play on the market. They're being dragged up with the market, but there's really nothing there to get excited about. So now let me stop and see if any questions. Ricardo, I will get to the yen and the euro in a couple minutes, I promise. Johanna, so does IYT look like a flat top? Let's see. IYT. Johanna, so IYT, in my opinion, this is essentially a ginormous flat top. So if big capital I, capital F, this thing gets going to the upside and we break out, It'd be a huge flat top breakout. It may be one where it breaks out, comes right back to the range, and then takes off again. But yeah, this would be a nice breakout if and when IYT gets off this arse and gets going. Before I forget, this week I am on Fox Business Tuesday night from 6 to 7 o'clock. Tuesday night, Fox Business 6 to 7, and CNBC on Thursday at 3 o'clock for, I think, 10 minutes, which I'll probably get maybe 2 questions asked of me. That's my media for the week. All right, let's go on to commodities. TLT, which I continue to own, has done nothing for several weeks. It's working off being overbought. Nice big run here. Frankly, I don't want to see this get back too much because it will ruin my scenario. So it's put up or shut up time this week probably for TLT, at least in the short term. Yields on the 10-year remain in my range of 230 and 150. Really nothing going on. If I had to pick away, although I am long TLT, yields look like they do want to poke a little bit higher. So which if they do, TLT is going to go down, then I will get stopped out and walk away yet again. But we have a nice little divergence here. The dollar. I mean, the dollar is, we talked about it a lot because, as you know, I've been a bull forever. I like that the dollar is not giving back a ton on the downside. We're in a nice trading range. It's working off this overbought condition, and eventually I think this high is going to get taken out, which will be a headwind for both crude, gold, and all the other commodities. Oh, before I forget, before I forget, guys, what should we be talking about? This is the NYSE AD line. What's important here? What's important on the NYS can't talk tonight. AD line. Up, 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 higher and higher. Yep. New highs. Why is this all so significant? Why do we even care? Yes, Johanna. Yes, Jeremy. Yes, Tracy. Because essentially, we've never had a bear market begin with the AD line at all-time highs. It normally takes several months to almost 2 years of a poor AD line to hit the market before we roll over. We could go down 20%. But all that would mean is that you're going to have a much bigger rally. So right now the AD line looks fantastic. No bear markets beginning, in my opinion. And before we leave bonds, I am long all my junk bonds again. Here's PHYDX. I own a different fund. I don't own this one, but they all look the same. So we're overbought for sure, but we're just peaking above the March high in the PIMCO High Yield Fund. Here's JNK is lagging a little bit, but it's still, I think, going to move higher. So maybe we consolidate, go sideways, work off stochastics, and then we get another leg to the upside. I'd love it to see it take above 40 and make me really happy, both from owning it as well as being good for the market. So let's check out gold. Here's a commodity. I'll make the same comment I made for a while. It doesn't look like it's running anywhere anytime soon. It looks like it's staying in a trading range. I eventually think it's going to go down and go below all these lows and probably go towards 1,000. But for now, I think you sell strength by weakness. So if the dollar starts to get off its arse, then gold will be under a little bit of pressure and vice versa. GDX, which I did nothing this week, really nothing. It's in a trading range, nothing to speak of. Silver, someone's going to ask. I don't know, kind of looks like the same thing, a pair of twos if you're playing poker, kind of dead money. No opinion either way. Platinum, before somebody asks, same thing in my opinion. Maybe a touch looks a little more constructive in here, but nothing really exciting anyway, in my opinion. Crude. So crude's been trying to hammer out this bottom and doing a okay job so far. I'm still relatively bullish over the short intermediate term. Eventually, I think we're going to get this rally back towards the 65 area, which I will definitely be a seller. But right now, we're a long way away from 65. Copper. Copper's now getting interesting once again. I mean, these 2 days, if you were a bull, you had to get out. I mean, those are 2 pretty solid reversal days. However, now we're really nicely working off this rally. This looks somewhat bullish. So, looks like to me copper is getting ready for another run to the upside. Natural gas. I just cannot get off the mat. It's been death. So I guess if you burn natural gas at home, you're in good shape. But it just trades poorly. Cannot get going. Eventually it will, just not yet. Let's see. The commodities we started to get a little more excited about last week. So wheat. Trading range, still like to get above these little peaks here to get even more excited, but it looks like it's going to try to rally. Corn was the one we didn't love last week because of the big red candle. If it's going to rally, it looks like it could rally right from here, but I think the other ones look a little stronger than corn. Soybeans, nothing. This candle excited me. So we got to wait again for a setup in soybeans. Let's see. Sugar, no opinion. This looks totally dead to me. Cotton. Oh yeah, so cotton last week, we came in here. This looked really constructive. Consolidation of this run. We thought we'd see further upside, and we did. Right now, I guess you got to give the bulls the benefit of the doubt. But if I owned it, I wouldn't give up too much more price-wise before I got out. But it looks okay, cotton. Last 2 are cocoa, which it's trying to bottom. Each big down day, it's really trying to put in reversal candles. So one of these days, you're going to get a really nice move up, and hopefully the patient will be rewarded. And finally, coffee. Nothing yet. Kind of dead. The overall commodity chart looks just like crude because they all are so heavily weighted towards crude. Let's see what else. Currencies. Here's the euro, which obviously looks crummy because the dollar looks okay. To me, it looks like the euro probably comes down and towards parity, drops down below this low. There's nothing redeeming yet that would make me want to own the euro. The yen, looks a little better than the euro, but I think this big shelf here, let's look at a weekly chart. I think this shelf here, even if we rally a little bit, I think we're going to go way below 80. So definitely a seller in the currency space. Let's see. Jay asks, do you put MLPs in with junk? No, Jay, definitely not. So I own a core holding. I buy and hold, buy to die. This one, AMJ. This is an MLP in my dividend strategy. So I own this, I think, forever. I don't put them with junk because typically you don't see oil collapses like the one we've seen in the last 6 months, in which case junk and the MLPs would totally diverge. But for the time being, they have some similarities. I think this looks okay. Now, granted, I'm long it, so I have to have a little more of a positive bias. But I think you can get a run higher into this peak, these two peaks. Maybe we get a run up, pulls back, and then we can get a run into the 50 area. Let's see. I forgot to ask what do I think to break out in EWJ. Anytime you guys have asked about my opinion on Japan for the last 3 years, it's been bullish because they're printing more money than we are when we did. So here's EWJ, which is Japan, the classic flat top breakout. Look at that. Look at all these peaks. Boom, 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 and eventually, there you go. Breakout, 1233, and we are off and running. Okay? So I'm still bullish on Japan. Until their QE experiment fails, I'm going to stay bullish. Buy weakness, and you can sell big rips, but I think Japan still goes higher. Some of the other ones, you guys like Brazil, no opinion. We're right back into this trading range here after breaking down. I don't really have an opinion on Brazil. Russia, one of you guys loves Russia. And I've said this all along, the time to buy it for my seat was down here. Up here, I have no opinion because I think on the upside you're capped by 20.5, 21, and you got a bigger downside. So no real opinion on Russia. And India, which I've owned on and off, I do not own now. No, it looks fine, but not a world beater. Turkey, nothing I love yet. You've got this bottom, and this top are all on the same line. So there's a lot going on with the bulls and the bears on this line. We break out above these two peaks, I'll be much more excited about Turkey, but not until that happens. Israel, I started percolating on my list. Look at this move in Israel in the last week. Pretty good move from 46 to 53. I'm not jumping on it right now. I'm just calling out that kind of out of nowhere Israel came to life. A little inverted hammer last week and 2 weeks ago. So maybe Israel, we can get some sideways consolidation, build up some tension, and then bust out to the upside again. Other questions, comments, concerns? Anything else? EWG, EWK. Well, we know Germany is a leadership country in Europe, and it's certainly a leadership country with an ETF too. Germany looks really good still, Johanna. But I like VGK just the same. Here, you got this flat top, and I think the breakout's coming. I'd probably play VGK before I would hop on EWG again. And EWK looks similar to, which one's K, Johanna? Netherlands or Belgium? Which one's K? But I'd rather play VGK, Belgium, yeah. So it looks fine. I think it probably goes, 18 to 20 bucks this month, next month. So no arguments here. Yeah, one more time. So on IVV or SPY and QQQ, they both look similar. They're still in this range. I think they're going to poke to new highs, but I don't think they're blasting off yet. So the scenario would be they poke to new highs, maybe run a little bit, and then pull back and consolidate. If they should turn tail before seeing new highs and break down below the old lows, would it change my opinion? It would just stall or forestall my thoughts that they're still going to all-time highs, just it may take till the end of the quarter. So I'm still intermediate long-term positive, and short-term a little murkier, but I'll definitely lean long and say we're going to go to new highs first. Do I have an opinion on where the U.S. markets are 3/4? Wait, Rick, hold on, you lost me. Do I have an opinion of where the U.S. markets are 3/4 from top, halfway? Oh, where we are in the cycle. Well, Rick, we're up 200 and whatever percent, 50, 75% from the low. But where do I think we are in the cycle? So we're 73 months into the bull market essentially. Although you could often make a case that the bull market actually began in October of 11. I don't care, it doesn't matter. But we're certainly long in the tooth and due for some kind of decline. But the market just keeps rescuing itself. So this is the latter stages of a bull market for sure, but by no means is the bull market over. And don't get too bearish too early, because the end should be fun, whenever that may be. So they see the report that 49% of Americans are not invested in the stock market. I did not, Scott, but I saw, actually, wait a minute, I just saw a report that said either 54 or 56% of Americans own stocks. So somewhere in the 50s, I did see some report, yes, and that's historically on the low side, but it's still in the middle of the range. I think the high end of the range is like 60. What's in VGK? Yeah, all the European countries. Let's go check out VGK. And I'll wrap it up, turn it over to Tiny, and go watch TV. Let's see. Oh, shit, they're going to give me a... So, Johanna, the answer is yes. VGK is full of all the European countries. It's essentially an index. It's a Vanguard ETF. Let's see if it'll give us the weighting on Vanguard's site. Let's see. Vanguard sucks. Great. So they don't break it out by country, but yeah, it's all European stocks, Johanna. Sorry, I can't give you more info. Their site is terrible. Okay, last call for questions. Questions, comments, concerns, quibbles. Oh, Tracy asked for Greece. Sorry, Tracy, I did not see that. I do not have any conviction on the Greek ETF, Tracy. Sorry, pair of twos. I'd rather buy higher than probably buy down here and get burned. Scott, any news on my Fox show starts? Scott, did you read the date of that email on my Fox show? Lenore, I don't understand what your question is. Funnel? Oh, this must be what a stock for tiny. Hold on. Oh, the German bond. Oh, God, I've never. Must be an ETF for the bond futures. Oh my God, this trades by appointment. I can't even offer an opinion here. I have not. I don't. On the bund, other than the rates are essentially all going to zero or negative on the bund. But this ETF, I know nothing about the ETF, how it's constructed, so I'm not going to speak out of my rear end. Yeah, Scott, check the if you have that email, check the date on that email. The date it was sent. What's the potential downside for small caps? I think it's the opposite. I think small caps look like they want to continue to lead and go higher. So if anything, I will buy small caps in a weakness until proven otherwise. Could they go down, the requisite pullback of 5 to 8%? Sure, Dimitri. But after last year's debacle, I think small caps are one of the places to be for the short term. Making more money. Scott, that was good. I wish, right? Yes, the Russell J. And I don't know, Scott, you'd have to offer me, not that anybody would really want me, but to schlep to New York or to sleep over there. I mean, I loved growing my business from scratch to where it is. That was a lot of fun, although at the beginning it kind of sucked. And I love being able to coach my daughter's softball teams and my son's baseball teams and referee my son's swim meets and do all that. No satellite. Satellite you can do short-term hits on, but you can't do shows via satellite. So it would have to be such and I wouldn't unwind my business. So it would have to be such a large amount of money that I could put aside enough where I could conservatively retire early to make me give up all the time with the kids. And that's why I left the city, frankly. When I left in '93, I was working on a prop desk, and given how young I was making good money, and I would have made a lot of money had I stuck it out, but I didn't play a lot of golf, I didn't ski, and that was more important to me at the time than working until all hours of the night. I wanted to have a life. I wasn't happy, and that's why I love living and being in Connecticut. I look out my back window here. I live in the end of a cul-de-sac. We have 2 acres of land, and I like being a smaller fish, a bigger fish in a smaller pond. Yes, Scott. What is April 1st, Scott? Yes, Scott. Now you get mad at me. So anything else? I know, Scott. Scott, every 4 to 5 years I plan a good one. I don't do it every year because it keeps you on your toes. But I had over 570 calls, emails, and texts regarding my new show on Fox. Everybody, Scott, emailed. Only 11 people figured it out, because if you scroll to the bottom of that email, Scott, there's these words in small print spelled backwards. But I even had calls from my friends in the media who wanted to do an interview that day about my new show. So, thank you. I'm sorry. When we get together for a face-to-face seminar, I'll buy you a drink or several drinks to make up for that. All right, Tiny, you're up, bro. You want to watch Madam Secretary with a good bourbon? besides me, any of you guys buy the new? I got the new Samsung Galaxy 6 on Friday. Any of you guys get the new Samsung Galaxy 6?
I got the Samsung, the big one, the Mega.
No, you got the Note.
No, I don't. I have the Mega.
What's the Mega?
6-something inches. And
Oh. Well, I got the Samsung Galaxy 6. We got it Friday. So I've spent all weekend long kind of, I'm not Steve Jobs or Bill Gates, but I'm not exactly a tech moron either. So it's been tough. And all right, you're up, buddy.
all right.
Adios.
All right. Give me your stocks. I'm trying to learn some new songs while I was waiting. Let's see if I can learn Run Like Hell. I love YouTube, boy. They could teach you everything. Wow. I would never be able to learn this.
Hi, I'm Andy, and welcome back to Pro Guitar Shop's
Hi, Andy.
Next up is a classic from Pink Floyd, Run Like Hell. And before we get into the delay settings, I want to remind you once again on how you can get yourself a free pedal. Every Friday, Pro Guitar Shop has a free pedal giveaway. All you have to do to enter is click this link here. For this famous rhythmic delay, we're using a Molecular Echo 616 Mark II. The Mark II version has a wider bandwidth and a cleaner delay signal, ideal for this tune which demands a solid repeat. I've also added some slow modulation for a chorusing effect in the delay signal. And you can find the latest version of the Echo 616 at ProGuitarShop.com. Let's get started by tuning your guitar to drop D.
It's very smart of these people. So they're a guitar store, ProGuitarShop.com, and they have YouTube videos of how to play guitar, which is pretty cool. If I wasn't so terrible,
Musician is the best way to learn, practice, and master the guitar.
maybe I'd buy a guitar from them, but I'm just terrible and I can't play on the guitar I have. All right. Anyway, just killing time while people are putting their stocks in. I am paying attention. No, I'm not eating. I just had a chip. I had a very big tortilla chip, and I'm chewing it a little bit at a time. Tomorrow starts the firm diet. I can't do this anymore. I am fatter than I know what to do with. This stupid surgery. I got about 6 weeks to my anniversary from this surgery, and I'm down about 50 pounds maybe. I think I'm down 50. Not acceptable. I was down 75, but then I decided to rejuvenate my love affair with ice cream, and anyway, and it's horrendous because I'm going to the gym, I'm doing everything, and I just can't lose weight anymore. So I I got to lose some weight. Yeah, I know. Ice cream is the worst. And I could eat it, too. That's the worst part. The worst part about the worst part is that I could eat it. It makes it even worse. But if anybody's in the New York area, you know what? I got a new book. One of you guys sent me. I apologize who it was, but somebody sent it to me. I didn't get it yet. I saw it. I shouldn't say I got it yet. But it's the one about eating your front-loading your carbs in the morning. So you eat your carbs in the morning, eat like a bowl of pasta in the morning, which is fine with me because I would eat pasta every freaking meal for the rest of my life and be happy. But it's about front-loading your carbs and then, or top-loading your carbs, whatever the heck it's called. No sound, really? Anybody else lose sound? Yeah, okay. Yeah, I know. Sucks. I mean, I go to the gym. I'm doing like 30 minutes, 35 minutes at a pretty good pace. I sweat like a freaking baboon. So I don't know what, I don't know what else I can do here. Yeah. I know a personal trainer is probably a good, but the thing with a personal trainer is they still want you to eat good. Anyway, doesn't matter. Well, my blood sugars are pretty good too, because I work out, but that's why. I read an interesting study that says if you do that, the benefits of cardio on your blood sugar lasts all the way to the next day. I get my heart rate up there. I get it to like 150s, which is pretty good for a 46-year-old. All right. That's it. I'm ready. No more stocks. I'll just take what I got here, and then if we got time, which we should, I will get more. All right, hold on. I got to open this. Got to make this bigger. I got to... Hold on 1 second. Questions. I will tell you, we're getting like nobody coming to these things anymore. I'm pretty depressing. So I got to start really promoting this. We're getting good signups, but nobody shows up anymore. They all watch the replay. So it's like, I'm like, gee, why don't we just do a video and save ourselves, an hour? Just do a half-hour video, because we're getting a lot of people watching. We're getting more people signing up every week, but we're getting less people coming. It's really strange. Today we only had 50 live people. Weird. That's weird. It was very strange. So I don't know. Anyway, it's okay. Glad you're here. I guess people are too used to the replay. They don't want to sit through the BS being here live. Yeah, we're going to do some promoting of it and maybe build it up that way, but I don't know. Maybe we'll just get more people watching the replay. I don't know. Very strange. All right. Dollar. All right, let's start. Dollar Swiss. So this is an interesting chart pattern. I mean, technically it's a triangle because it has converging trend lines, but I don't know. I don't really think it's a triangle because of this big crack here. At this point, though, it does look like it wants to retrace this whole thing, which would be kind of strange. We're going to stick with currencies for a couple of minutes here. Dollar yen looks like it's going higher, and the euro versus the dollar looks like it's going lower because the dollar has come out of its bull flag, and the dollar looks like it's going to go to a new all-time high. I still think, as does Paul, that we're going to at least par on the euro. I think we're going in all-time lows. So I think the euro will be lowest it's ever been. The Aussie versus the dollar also looks like it's going lower. All right, let's look at the euro cross with the pound, and you can see this is an interesting setup too. So, because if we go to pound dollar, I don't know how many people trade forex here, but it's kind of interesting to watch the forex pairs, even if you don't trade it, even if you don't trade them. Anybody here trade binary options? Anybody here trade binaries? Because, they're regulated now. It's not the Wild West anymore. It used to be when you used to open a binary trading account, in the paperwork, it used to say that you're only getting 80% of your money back. How insane is that? But, okay, so you use binaries, yeah. Because binaries are pretty interesting right now. I'm going to talk about them in the next coming weeks. If you guys are on my list, you'll get some information on them. But, anyway, so here's the pound dollar, and it looks like it's going lower too, and so does the euro versus the pound. Oh, it looks like it's going, this looks like it's going lower too. Looks like a small double top. So here's Aetna, like I talked about. I mean, this really looks like it wants to go higher. Walmart. Yeah, Walmart's sitting on its 200-day here, so, I love setups like this because whichever way you go, right, if you buy it on the break, you know right where you're wrong. If you short it on the break, you know right where you're wrong, which I like that, I mean, it's kind of easier to short this than go long, and I don't mean that's where it's going, but the reason that it's easier to short this is, let's say you wait for it to break and you short it, you put your stop right above the 200-day. So it's probably not that much risk. But if you go long, you got to put your stop underneath the lows, it's still not bad. I'm not saying that. I'm not giving an opinion here. You can't give an opinion on this stock because the only opinion you can have is that it's going to move one way or the other shortly. Watch your levels. And in my opinion, which is an opinion in and of itself, that is a better opinion to have than is it going higher or lower. So many people are fixated on, well, I just want to know if it's going up or down. Well, sometimes you don't know that, right? You just know that it's set up to move. And now what you want to do is you want to wait for that move. I would rather have that set up than have something which, and I'm sure we're going to see, because you guys are always great for giving me a lot of stocks that have made big moves. So, you're going to see a lot of stocks tonight that are probably extended, and you're going to get the same thing from me, which is looks higher, but I'd wait for a pullback. That's, in my opinion, a shitty way to look at it. But there's nothing else I can do, right? I would rather have stocks that are set up like this in these little tight patterns, and at least I know that a move is coming because Walmart's not staying between, let me get rid of these, between these two yellow lines, very long. I mean, yeah, maybe another week or maybe, maybe another month. I doubt another month. I'm just saying maybe another week, maybe another month, whatever, but it ain't going to be much longer, So that's the kind of setup I like, but people are so infatuated and so obsessed with, is it going higher, lower, going higher, lower? And the real answer is, I'd rather just know that it's working, that it's going to move. DNR is an interesting stock here. I like this. You're set up here right under this high in the low nines, and you got this small little coil here. Again, it's only artwork until you get the confirmation, but if you do, and you could get through this little speed bump, well, then I spoke too soon. You still got a gap under 10, and then maybe then it can go into the 200-day moving average. But you got to watch this here, okay? Hog, it's Harley Davidson. I mean, watch the 200-day. I can't get really rah-rahing until, this can get over the 200-day because it's kind of still like in a sloppy kind of channel on the way down. SWKS, yeah, I mean, one of those stocks that I just talked about. I mean, it's in a nice, strong uptrend. I would not be shorting this thing, okay? And it's in You know, you just maybe have to adjust the lines, but it's in a triangle. It's not in an Aetna type of coil, but it's definitely coiled up. Okay, RRD looks like it's going higher. Looks great, looks strong. XOXO, this is interesting. I like stocks like this because it's coiled up, and again, does it look like it's going higher? Yes. You gotta still wait for confirmation, but this looks like it wants to go higher and test these highs. When I draw this line like this, that doesn't mean buy it now because it's going to do this. Maybe it's going to do this. You know, I didn't look up XOXO. This isn't on my list, so maybe it has earnings coming up. You know, you got to take all that into account. You got to do some work. You know, the technical picture is just, I mean, it's more than just a little bit of it. It's more than just, you know, a minor thing, but you got to do other things. You got to look, does it report earnings? What's coming up? Are there news events? You know, once you've narrowed down your stock, and there is really no reason that you should have any more than 5 to 10 stocks to look at every week. You know, you should get a watch list of 5 stocks, 10 stocks, focus in on them, do the work, spend the hour or two on them, right? Even if you start Friday night and do 30 minutes and then do 40 minutes on Saturday and 40 minutes on Sunday, you're done. You know, I mean, and it's probably not even going to take you that long. Once you get in a rhythm, you could do all the research on 10 stocks in probably an hour. You know, you go through the earnings calendar, you check their websites, you see what's going on, and next thing you know, it turns into fun, especially once you get a couple of winners and you're like, wow, my research actually paid off. You know, I mean, I know we're all tough for time. I mean, I can't believe how busy I was today, considering that I look back and got nothing done except gave my kids showers. I mean, that was the highlight of my day, was giving my kids showers because they were outside playing in the background, decided to find the hose, and got, you know, sprayed the living crap out of themselves. That's the highlight of my day. And bringing my wife to work. Still bringing my wife to work because she has to get her truck fixed, and we just decided when it was in the winter just to leave it be because she can't be broken down with that thing somewhere. So, I mean, that's the highlight of my day. That's how quick time went. Next thing you know, it's 8 o'clock, and I got to come home and do this. So I know we're all short for time. So break it down. You know, you get 5, 6, 10 stocks, and you do a half hour, 40 and 40. Like I said, next thing you know, you're done. All right, ICE looks like it's coiled. I mean, there's no play here, but if it breaks out, it looks like it's going higher. IBM. Yeah, I mean, could it be bottoming out? Possibly. You know, is this a pure inverted head and shoulders? Of course not, but it's in the spirit of one. If it can lurch over 165, maybe it gets to that 200-day moving average. Okay, FRO. Yeah, well, this is a nice start, right? It's a nice start above the getting above the 50-day moving average. See if it can go and get up to the 3s. All right, CRM. Yeah, I mean, I think yet last week was the last time I probably looked at this. And it's in a consolidation here. So, yeah, see if it can get out of it. But, I mean, again, very tough to trade until it breaks out of this. And the thing is, it's supposed to be tough to trade like this, right? You're not supposed to be able to trade this. That's why it looks like this, right? Wait to see if it releases itself. All right, EQUI. I have no idea what this stock is. I have no idea. Looks like a penny stock. I'm not interested. VLO, interesting. You got the lurch up to the top, and now it's coming down. I'm a wait-and-see mode here. Maybe you got a megaphone here? I don't know if you got a megaphone here or not. It's amazing. Paul leaves, and now he just starts answering all my emails. It looks like it could be a potential megaphone here. Netflix has earnings coming up. Be careful. It looks like higher on the short term, but I have no idea what it's doing after earnings. It could go to 5,000 before earnings and be at $300 after earnings. Of course, that's a ridiculous exaggeration and probably won't happen, but I have no idea what it's doing after earnings, and the chart pattern will not tell you. It can do whatever it wants after earnings. Serious. Okay? I don't know what these XOs and all the, let's see. So this AAL is interesting. It's still pulling back. Looks like it's coiled here. Watch this bottom here, right around 46 as support, and then you got the 200-day right below it. JP Morgan has earnings coming up. Looks higher on the short term. I have no idea what it does after earnings, and they report Tuesday. McDonald's looks like it may want to start moving higher. There's a lot, I read an interesting article on McDonald's. I almost wrote an article for the blog comparing McDonald's to Wendy's. I thought Wendy's had a better looking setup, but one thing I said, I never printed the article because I'm lazy, but I said that, I thought that McDonald's was getting a lot of crap for year over year and not doing this and all that. And, yet I don't see them really getting hurt here. I mean, it still looks bullish to me. So I don't know. I don't know what, a lot of people were calling for the death of McDonald's, but it doesn't look too bad. EXAS, it's got to get away from this. And again, I think it will. It's been here now for, over a month, but it's got to break away one way or the other from here. I don't know which way it's going. Every time it gets below, it seems to come up. Every time it gets above, it seems to go below. So I don't know. All right, hang on one second. More stocks. Apple. Yeah, it looks okay to me. It had this little coil. I love the way how it caressed the 50-day moving average. So, let's see if it can break out of here and try to go to highs. WNR, holding the 50-day, see if it can get a bounce from it. GDXJ. Yeah, I think gold looks lower, so, the GDX and the GDXJ, whatever it is, they look, I guess, better than, a little weaker. GDXJ definitely looks weaker than overall gold. It's just like kind of, looks like it just wants to fall over. But all these patterns are great, once they get confirmation here, right? You got to see. But if it can get over the 50-day, you still got a little trouble up here. It doesn't look good to me. Crude oil looks lower to me still. Again, I think it's just taking its time. So many people, they just get caught up in the fact is, well, the decline in crude oil is over. Well, you know what? After a move of this magnitude, you got to rest, right? Price equals time. The sharper a move is usually the time it takes for it to digest afterwards. So you just got to keep that in mind. I still think crude's going lower. Starbucks looks higher. Okay, Starbucks looks higher here. Bank of America has earnings coming up. Doesn't look so great here. Of course, after earnings, that could change. KR. I like it. It's flat top. I want to see if it can break out and go higher. KR looks good. WBA. Yeah, stretched, but looks great. This wash, I think you ask every week about this, Scott. If you've been keeping it on the long side, you're doing really well. This thing is nice. Again, I'd like to see it pull back and pause. It's a little extended, but, you see what happens when it does, right? It gets extended, it pulls back. It gets extended, it pulls back. So, and this isn't just WBA, right? It's like, oh, look at this stock. It perfectly extends. No, it's called the market. The American stock market, the U.S. stock market, is a mean reverting market. We revert back to the average, okay? BRX, that's BRZ, that's why it's not coming up. It's interesting stock, a little sloppy here. Looks like it may want to continue down and test the 200-day before it can get a bounce. NAT, Nordic American Tank, looks higher, looks nice. A little overbought, but it looks nice. Looks like it wants to go higher. Guild, interesting. Still in this mess, right? I knew paralleled it instead of extending it. I apologize. So, it looked like it broke down out of this, and now it looks like it's just my lines were wrong, which is fine. This is, what can happen. But now it looks like this is probably the better line. I don't like all this dead air here. I don't like that when I'm drawing a pattern, but it looks like it's there. Gotta wait and see on this, but when it moves, it could get a really nice move here. Celgene, get over the moving averages, and then I could get bullish on it again. I'm not bearish on it, but it looks like it could either stay sideways or correct a little bit more. It doesn't look super hot here, but it also doesn't look terrible by any means. ISRG looks great. Looks like it's going to go to, looks like it's going to go to, yeah, probably up to these highs up here in the 600 area eventually. Looks like it really has to get through this. I think if it breaks this 541 and a quarter mark, I think it's going to new all-timers. Okay. What else we got? So you said I held into earnings. Okay. If you lose, okay. I'll take a couple more stocks if you want me to. I'm still around. So go ahead. Shoot, I'm going to check my email while you guys list them, though, because I'm getting a million notifications from Gmail. Hang on, guys. I'm here. I just need a minute. So I'm here, though. I'm going to get to all your questions. All right, I'm back. Sorry, guys. I wanted to all right. All right, no more stocks. I'll go through these now. Palo Alto looks great. Yeah, I really like this stock. I think it's going to launch over 150. Really looks great. Watch earnings, though. But this is a really nice looking stock. I don't know. Splunk, it looks slop. It looks like Splunk. It looks hot, sloppy as crap. Whole Food, yeah, I mean, it's consolidating here, but I mean, it's got a lot of work to do if it wants to go much lower, so it may hold in here, but for the bulls to get on it, it's got to rotate back up through. Baba, I still think Baba's going lower. Dow Chemical, it's got to get over the 200 day. Right? But it's coiled. So if it gets up, man, it should be able to get above 50 and try to start moving. It looks nice. HYH, it's extended. I don't, yeah, it looks okay. I wouldn't short it, but I'm not sure if I'd like to jump in right now. Panara, sloppy. Very sloppy. SLV is silver, looks lower to me. Also looks sloppy. CLX, yeah, it's okay. It's sloppy, but at least it's in a strong uptrend, you know what I mean? So it kind of makes up for it. CU, yeah, I don't know. It's in a downtrend. Yeah. It's over the moving averages except for the 200-day. I'd wait a little on it, see if it could form something better. MA is sloppy. That's MasterCard. Visa looks a little bit better, but still sloppy. SDRL. And it's waking up here. I mean, it's got to get over the 50-day. If it does, maybe it'll head up to this area. Okay. M. Yeah, it looks okay. Macy's looks okay. It's overbought, but it looks okay. It looks strong. UTX, got to get over the 50-day moving average for me to be interested. Under Armour looks great. I think it needs to pull back, but it looks strong. I wouldn't be shorting it here, but I'd look for a pause or pullback for a buying opportunity. Already did Apple, leg. Watch the 50-day, see if it holds. If it does, look for it to rotate back higher. AGNC. Yeah, it's sloppy more than anything. It did not fall out of this coil. Instead, it fell up, if that makes any sense, which of course it doesn't. Now you have a trend line, so see if it can break it. But it's more sloppy than anything here. SDRL, I already did. PG. Watch the 50-day. Again, I mean, you could draw lines on it. You could wait to see if it's either going to come up and get through these moving averages or break down and go down to the lows. Equix looks like it could wanna looks like it could want to go higher. Now it looks okay. Looks like it may want to go higher here. I like could wanna better than may wanna. May wanna. So Hewlett Packard, we drew this wedge, it dropped out of it. Now it looks like it may be trying to bounce, but watch the 20 EMA, because if it holds as resistance, then I'm expecting it to kind of rotate it back down. All right, so that's it for me. And I am not doing a video this week. I'm just going to send this out as the video because we go over a lot of stuff and there's not a lot going on. So just use this as the weekly video. So thanks for coming. I'll see everybody next week at 8 o'clock. Tell your friends, family, and everybody about it so we could get more people coming here. But like I said, we're getting good registrations. Just people decide they're not showing up. Shameless is over. Justified is over on Tuesday. Last episode in the series. Amazing. Already over. Okay. See everybody next week.